Welcome to the Morning Download podcast, where we bring you all the essential information on personal finance, economics, and markets in just 8 minutes a day. Join us as we dive into the world of finance, providing you with the knowledge and insights necessary to make better money decisions. In today's episode, we'll cover the record low mortgage demand, the concerns over rising treasury yields and stock sell-offs, the limited number of billionaires holding Bitcoin despite the increasing number of cryptocurrency users, the various types of ETFs and how to invest in them, and the importance of utilizing money to make it work for you.
So, let's dive into the latest news on the economy. It seems that mortgage demand has hit a new low, even though mortgage interest rates have slightly pulled back. Last week, mortgage applications saw a decline of 2.9% compared to the previous week. This marks the lowest level we've seen since December 1996. It's quite surprising considering the drop in mortgage rates. Joel Kahn, an economist from the MBA, noted that rates are still more than a full percentage point higher than they were a year ago. This is despite mixed data on the health of the economy and signs of a cooling job market. The decline in applications was particularly evident in refinance requests, which fell 5% and were about 30% lower than the same period last year. Why the decline, you may wonder? Well, prospective buyers are staying on the sidelines due to low housing inventory and elevated mortgage rates. It seems like they're hesitant to jump into the market at this time. In other news, there are a couple of global hits worth mentioning. First, there's a dispute in Australia that might result in higher gas prices in Europe. Additionally, the EU has labeled companies like Google, Meta, and Amazon as digital gatekeepers. Lastly, China's Evergrande has experienced a boost in its stock price after Country Garden avoided bankruptcy. It's always interesting to stay up to date with the latest economic news. Another day, another dip in the stock market. It seems like the slump in September is sticking around, and it's all because of those pesky interest rates. The yields on the 2-year Treasury note shot up over 5 basis points and are now trading above 5%. Yikes! But that's not all. The latest economic reports also hint at some not-so-desirable news. Prices aren't exactly moving as we'd like them to, according to the ISM Manufacturing Index. The prices component of the index saw a significant jump of 5.8 points, landing at 48.4. Now, what does that mean? Well, anything below 50 indicates a shrinking manufacturing economy, not exactly the best news for investors. And to add to the mix, all eyes are now on the Fed. There's growing concern that they might decide to increase rates as early as November. And you guessed it, that's causing even more fear among investors. It's like a domino effect, one thing leading to another. So buckle up, folks. The stock market roller coaster isn't done with us just yet. Let's hope for some positive news to bring back that confidence and put those fears to rest. Fingers crossed. Did you know that there are only 6 Bitcoin billionaires in the world? It may come as a surprise considering that there are currently 425 million people using cryptocurrencies. But various factors like the market crash have contributed to a decrease in the number of billionaires. Bitcoin, which soared to nearly $65,000 in 2021, is now trading below $26,000. On the other hand, a different report revealed that more than half of Generation Z has invested in digital currencies. However, it seems Americans are still skeptical, with 75% expressing distrust in cryptocurrencies due to concerns about data theft and breaches. Interestingly, 45% of digital coin investors have not yet achieved their investment goals, while only 15% have seen their investments exceed expectations. Now here's a fun fact. Out of the 88,200 people who hold crypto assets worth at least $1 million, less than 1% of overall crypto users, only around 40,500 have invested in Bitcoin. Additionally, there are only 182 investors who hold over $100 million in crypto assets. In total, there are 22 billionaires in the crypto world, but only 6 of them possess Bitcoin, worth over $1 billion. And here's something alarming. According to Chainalysis, North Korean hackers have been stealing crypto to fund their country's nuclear program. Just this year, they managed to steal cryptocurrencies worth a staggering $200 billion. So, let's talk about exchange-traded funds, also known as ETFs. These are a type of investment that can help you diversify your portfolio by investing in a variety of securities all at once. It's like having a collection of hundreds or thousands of stocks or bonds managed by experts in a single fund that you can trade on major stock exchanges. Now, why should you consider investing in ETFs? Well, if you want to keep things simple and follow a set it and forget it strategy, then investing in an ETF or an index fund is a great option. This way, you can benefit from diversification without having to individually pick and manage multiple stocks or bonds. There are different types of ETFs to choose from. For instance, you have stock ETFs that focus on long-term growth but come with some risk. These ETFs can include stocks from various industries, providing you with diversification. Then there are commodity ETFs that consist of commodities like precious metals, oil, and gas. These can be a bit more complicated, as they may involve futures contracts and physical ownership. If you're looking to generate passive income, consider bond ETFs. These consist of bonds but don't have a fixed maturity date. For investors seeking diversification in global markets, international ETFs can provide access to various assets like bonds and stocks. If you have a specific sector in mind, sector ETFs can help you focus on areas like healthcare or finance. However, keep in mind that these can be risky but potentially rewarding. Lastly, there are leveraged ETFs, which aim to offer higher returns than the index they track. However, be cautious as losses can be magnified if the index doesn't move in your favor. Now let's talk about how to invest in ETFs. First, you'll need to find an investing platform that offers ETFs. Some popular examples include eToro, AJ Bell, and Freetrade. Consider factors like fees, minimum investment requirements, and the variety of available ETFs. Alternatively, you can explore traditional brokers. Next, do your research on the available ETFs and find the ones that align with your interests and investment goals. Pay attention to factors like the assets included in the ETF, minimum investment requirements, average returns, and the fund manager's track record. Once you have a strategy in mind, such as dollar cost averaging, you can start investing. If this is your first time, it's wise to start with a cautious approach. So go ahead and buy the ETF you're interested in and hold on to it. Remember, investing in ETFs can be a smart way to diversify your portfolio and potentially grow your wealth over time. Let's close up today's episode with a personal finance quote. Money is always eager and ready to work for anyone who is ready to employ it. Don't you just love the idea that our hard-earned cash is just waiting for us to put it to work? It's like having your own personal employee always at your service. But the catch is you have to be ready to give it a job. If you don't put your money to work, it just sits there, gathering dust, not doing much good for you. So how do you employ your money? Well, there are plenty of ways. You can invest in stocks, bonds, or real estate. You can start a business or put money into a retirement account. The choices are endless. The key is to be proactive and not let your money go to waste. When you have a plan and put your money to work, it can truly be life-changing. It can help you achieve your goals, whether it's buying a house, traveling the world, or retiring comfortably. Remember, money is like an eager employee, waiting for you to take charge and make it work for you. So let's get excited about putting our money to work and making it thrive.
In this episode, we explored a range of topics, including the softening housing market and record low mortgage demand, disputes in the digital gatekeeper realm, stock market volatility due to interest rate fears, the rising value of Evergrande stock, the limited number of billionaires holding significant amounts of Bitcoin, the prevalence of cryptocurrency users despite North Korean hacker activity, the various types of ETFs that offer diversification, and the importance of making use of money for personal growth and financial success. Thank you for joining us on the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day, empowering you to make smarter money choices.
Remember to subscribe and stay tuned for our next episode.